See, this is the problem with the gold industry. They lower the cutoff grade to profitless prosperity. What are you going to do with your cutoff grade? Are you going to keep it the same in the coming year or keep lowering it to profitless prosperity? If you are an investor, what you're looking for is you want to capture that margin.
JD, gold is back. Gold's back. It's coming back after a little bit of time in the brief sin bin. It was just very brief. Just a pause. It's back. The equities are roaring again. There's a little bit of excitement back in the market. Earnings season has come out, and everyone's realizing that these gold companies are making an absolute fortune at the moment. And so, very topically, we've got the very kind Greg Orrell, who runs the OCM Gold Fund. And mate, you've been doing this for 30 odd years. You're so familiar with the gold and precious equities. We're delighted to have you joining us all the way from the United States, and we're keen to talk everything gold equities with you today.
All right, my pleasure. Looking forward to it. And enjoy your show.
Great to hear, Greg. I think the logical place to kick this one off is the run up in gold equities and the even more extreme run up in the gold price has seen earnings, like Trav said, be quite strong. How have you sort of reflected on the profit margins and the money being earned by miners across the globe, really, in the past couple of months of earnings?
Yeah, I think it's been a bit slow on the uptake by generalist investors, really. If you look back at how this year has gone, every quarter you've seen an increase in the gold price, and though the price of the shares have gone up, you really haven't gotten the enthusiasm that you normally would, that it would be typically associated with bull markets. Partly that is to do with the broader market continues to run, and so gold is looked at as a defensive type of asset, and so with the broader market running, especially tech, AI, etc., you haven't had a lot of folks feel like they need to chase into the gold space, and so you've seen the GDX come in with 20% less shares than they've had at the beginning of the year, which gives you the idea that money's still coming out of this space. So I look at where we're going. There's more room to run. Obviously, sitting in my seat, I'd like to think that. But I still look at it and believe that we're going to see more retail. We're going to see more institutional investors come into the space, and you'll see these margins start to press out. So what happens in a bull market, the number of companies that really start taking off and start to see M&A at the top of a cycle. You'll see the gold XAU ratio be somewhere north of 6, probably at a peak, and you're still at a much lower level than that right now. And so what we're still seeing is still a lot of room to grow just by investors coming in. And so if you look at the cycles of when gold goes to at a peak, the gold price will peak. This is looking back at 1980, and the gold price peaks, and the shares don't really. They fall off, but then they have the real bull market run comes in that period that came afterwards, and there was a big bull market. That's when you pulled in the Barricks that were created, and the companies were created with settling at a higher gold price. And I still think what's gonna happen is we're going to settle at a gold price that once the U.S. can get its debt situation squared away, is we're going to get a gold price that stabilizes at a pretty significant level that folks they're still looking back and saying, oh well, gold price can't handle, it's not going to stay above 3,000. And I think right now, when you start looking at these gold shares, they're starting to get a feeling, a base of okay, $3,300, $3,400. That's a good base. So we're just kind of just getting our feet wet.
Do you think the consensus view is that gold can't hold above 3,000?
I think that has been the consensus, absolutely. Yeah. And I mean, the Aussies have been weak for a while. They took off over the last month, and I think that was finally some belief, coming in for, the gold price is going to hold above 3,000. It's, and you're starting to deliver, whether it's a Westgold or, any of these companies, they're starting to deliver, some, decent cash.
It's what do you, when you look back through history at the periods where like gold miners have very substantial like margin, do they actually have a sustained period of strong margins typically, or does inflation often kind of erode their margins pretty quickly? Because that's in the back of my mind, like if inflation comes back pretty sharply, like all of a sudden cost pressures surely eat into the margins.
Yeah, I mean, you've seen some cost pressures, and I mean, right now you're starting to see, where the price of inputs has leveled off a bit. It's they're up, and if you look at all-in sustaining costs, being up over the last year, part of that is when the miners are making money, they do put money back in under the ground that they need to put back in, which then allows them to sustain themselves, when the gold price goes back down a bit. But yeah, you do see a level of inflation that comes in. Everybody wants their piece, whether it's governments or employees. But what I've seen so far is that we have a a gold price that is allowing for margin expansion, and the gold price at this point in the cycle is moving faster than the inflation is, and that's important for margin expansion.
Totally. The point you made on sentiment is really interesting, Greg. How do you reflect on the sentiment in the States? Because I see on the one hand, like Walmart selling out of gold coins and stuff, but on the other hand, to the point you made earlier, tech is the consensus trade and all these sorts of things. So from your perspective in that part of the world, how do people think about gold?
People, they'll like I said, they'll look at gold as from a defensive standpoint, and you've had this money that's moved into crypto, and I think that at some point when there's a high correlation between crypto and Nasdaq, and once the Nasdaq does break, I still think it will at some point. I mean, you've got Nvidia and these stocks, Palantir, that are trading at multiples of their revenues and earnings that typically mean that they've reached a peak, because it takes years to go in and finally earn those multiples, and whether it was Cisco in the 2000 era or Sun Microsystems, Sun Microsystems trading 10 times revenue. It just gets to the point where it's too far, and I think we're getting that now in the cycle, but still there's so much money that's been made in Nasdaq and the tech stocks. It's going to be a real tough to try to turn that and have people believe it's over. So I think that where sentiment is right now, in the gold space, is that they still need to see the market roll over, and then you'll get some broader participation.
You mentioned that like in the good times, these gold companies, they put the money back into the ground. I'm noticing a lot of lowering of the cutoff grades occurring, and then to coincide with that, there's a mill expansion study underway. So these gold miners, they've got excess capital, but they're just lowering the cutoff grades, doing the mill expansion, and saying that costs are going to be able to moderate from economies of scale with a bigger mill. But then they're depleting their resource faster. And once you've got a much bigger mill, like you kind of always have to keep that thing full. You can't go back after doing that. So how do you like weigh up your views of just like discipline around not lowering the cutoff grade and doing this sort of thing?
Yeah, stay away from those companies.
Really? Why? Yeah, please tell me
Um,
why. Like, why you come to
well,
believe
I
that?
mean, look, see, this is the problem with the gold industry is that they lower the cutoff grade to profitless prosperity, and so if you are an investor, what you're looking for is you want to capture that margin. I mean, the story that fund managers like to tell is that okay, the gold price is it's $2,000 an ounce and it's going to $3,000 an ounce and our cost is 1,000, and we're going to have 100% increase in our margin, and and if you sit there and lower the cutoff grade to 0.000001, you're going to be in a position to where that margin goes down to nothing. And this is historically what has been the problem with the gold miners, is that they have destroyed the margins. And I think one of the things that I certainly preach in all the meetings is and ask management are, okay, well, what are you going to do with your cutoff grade? Are you going to keep it the same in the coming year, or are you going to keep lowering it to profitless prosperity? And they all say, oh well, we gonna try to manage it and try to keep the margins, but we want to make sure that we extend the mine lives because we already have the capital spent. Well, if you have that capital spent, you don't necessarily you don't necessarily make more money by lowering the cutoff grade, even though some of these guys think that they are going to.
So Travis, mate, I'm going to share something with you that Greg shared with me before the interview. This little bit of insight into his checklist. Do you know what was the top of his checklist for investing in an underground gold mining company?
It's not anything to do with lowering the cutoff grade is a bad thing. That's like a...
Not at all. The key detail is, mate, the company has to use Sandvik ground support.
Yeah, of course.
And it makes sense, right?
Yeah.
Great companies want to work with great people and other great companies that deliver great products. And why not work with the best in the industry in Sandvik ground support?
It's a signal of the type of company you are if you understand that using Sandvik ground support is going to save you time. Time is valuable. It's going to save you a lot of just like bandwidth, knowing that you can depend on the product that's coming. And it's, of course, going to be as safe as there is humanly possible because of the R&D that goes into making this ground support a truly innovative product that is essential for safety.
We were speaking about this R&D before, whether it's the resins, the Easy 10, the latest bolts they've got, whether it's the app, they are innovating on every single front of the business. Not to mention they are working in every single corner of the world so they can get that product to the mine site as quick as possible. And of all the things you mentioned in saving there, the biggest one is money.
Mate, you know what
profits.
I can't wait to do? I can't wait to go to Côté and see some of this innovation with the main man, Derek Hurd. I think it's going to happen later this month. You and I, we're going to Côté with Derek Hurd. I can't wait. Go Sandvik ground support.
Go Sandvik.
It's such an interesting kind of reflection on the capital allocation decisions of management in the sector. And I think there's also just like everyone thinks that they need to have growth in their portfolio. They've got to have they've either got to maintain production or have a growth project. And if you look at the gold company that commands the highest multiple in the space, they're ex-growth. They don't have any growth, but they have maintained margin. Like they have maintained their costs, right? Agnico, of course.
Yeah. So Agnico is, they're right now saying, hey, look, if we don't have a good project to put money in, we're going to give that money back to shareholders. And that plays well, for investors. And I think, that there are projects out there. I mean, this is one of the things that is going to be tough because, I mean, when you look at a mining company, when they acquire a new project, they have to look at it from the standpoint of getting a return on that capital. And whether it's issuing shares or issuing cash, you have to get a return that is commensurate with real competitive returns in other industries. And I think that's one of the problems that historically the industry had, is that you were in a bull market, it was growth for growth's sake. And if you were going out looking for a project. You just issued more shares, you got bigger, everybody got bigger salaries, and everything was wonderful. I think what Agnico is doing a good job of is they're telling investors out there, look, if we don't see anything good, we're not buying it. They're also these miners are not comfortable yet with this gold price. They're still sticking, at much, their cutoff grades and everything, based on what I can see right now, are based on lower gold prices. So they use consensus gold prices, and consensus gold prices by the analysts are usually pretty far behind because they're run by banks that don't want to see much higher gold prices. So
how do you then forecast gold when you sort of build out your models or think about it? Do you just sort of do various levels of sensitivity analysis, various cases?
Yeah, I mean, our gold price assumption is much. Right now, it is lower, just because if you historically go back and look at a 10-year trailing average gold price, as I believe is probably the best number to look at. And if you just take a simple average over the last 10 years, you get a number that is significantly lower than the current gold price. But if you're a mining company and you maintain that, you're going to keep your margins throughout the many cycles. And I think we're in an interesting period right now, in that the gold price is really tied to total federal debt outstanding. And if you were to look at the gold price since Nixon closed the gold window, you'd see about a 93% correlation to the gold price and total federal debt outstanding. And so if we if the U.S. could actually get its act together and start to slow the rise of total federal debt outstanding, then the gold price would slow down. But it's going to continue to this upward trajectory as long as total federal debt's going up. I think that Trump, he's a real estate developer, and real estate developers love debt. And I just really don't see him making a concerted effort to lower the debt. So
how would you think about positioning the fund if you were to sort of see a slowdown in gold or in the sort of federal debt level?
It's a gold fund, mate. It's always a gold.
But there's various ways.
Yeah, I mean, you certainly can. Well, one of the things you do, I mean, the first thing you do is you really start chopping off your exploration and development companies. I mean, that's where the axe comes first, and then you go on to your junior producers, and what you do is you just move up scale. And so you'll be, I mean, if we have to be 85% invested in the space, being a gold fund. So what you can do is you can buy bullion. It doesn't go down as fast and as hard as the miners go down. But what you will do is look to have larger cap companies. So you just move up cap is what happens. So what you haven't seen in this cycle is you haven't seen the big rush in exploration and development companies, and the smaller miners are catching a bit of a bid now. But just the rush of excitement that happens in a bull market, where a drill hole comes out and it goes up a couple 100%. We're not seeing that as much, at least in the States. We're not seeing it. I mean, you have a few here and there down in Australia that have had some nice moves, but it's still it's not an easy market to really gauge the prospects of who's going to be the next winner.
Retail is coming back here, but they're it's not like fever level pitches yet. The IPOs are on their way. they're a good thermometer. The cap raises are just it's just cap raise season, and that just shows that there's like a lot of capital available for the sector right now, and that's just the observation I've got.
Yeah, I mean, certainly when Canaccord sits there and hits us with a deal a night, type of thing. Yeah, you have to kind of say, all right, maybe things are could get a bit frothy. Look, I certainly believe that we are due for some type of pullback, and then we go again. I mean, that's just what ends up happening is that you got a lot of folks that aren't involved in the space at all that will get involved, but there is hot money that is in the space, and so you'll have 30% moves, and then you'll pull back a bit, and and then you go again. So nothing wrong with that.
One of the other reasons or sort of factors that comes to mind is the more disciplined approach to M&A this time around versus 10 years ago, and perhaps people thinking there's less odds of your junior kind of getting bought out. This ties in as well with the capital discipline, the margin discipline that you spoke about earlier. How do you consider the approach to M&A in this sort of bull market that we're in now?
Right. I think that disciplined M&A is really the approach. I mean, that's what folks have been preaching for quite a while. That have been in the space, sitting in my seat. That's what we've been telling companies is just don't go buy something that doesn't have economic rationale. And obviously that if you have a company that has one asset and there's a short mine life, you've got to do something in order to keep your seat. So it really depends individually on the situation, but I would say overall, the bigger miners are really generating significant cash right now, and so I think that they're been more apt to do buybacks than buy companies, but they will buy companies. I mean, that they have to get comfortable with the gold price assumptions before they do that, and so I'd like to see them really use cash to buy assets versus shares. I think that's more accretive. The other thing to do is this is totally off topic, but is instead of selling every single ounce, paying taxes on it, why not really put that gold just in the vault? You mine it, put it in the vault. It it certainly holds up better than currency has for quite some time.
Yeah, the one gold miner that's done that for a very long time. He trades at negative EV, Tribune and Rand. I'm not sure if you're familiar with that company. Well, it's two companies, but they've got like a collectively owned 50% interest in the East Kundana joint venture with Evolution. I think the amount of gold that they've got in vault is enormous. Like, it's eye-watering.
And I just think at some point, they become ETFs. So, there's nothing wrong with that approach. And I think, the industry has been, because everybody does everything on, PEs, and they've been not willing to accept companies to, put the gold on their balance sheet.
Yeah.
But
yeah, it's a great point. Great point. Should we talk stocks with you, Greg? We'd love to kind of peel into some of the names within your portfolio, and also outside of your portfolio if you've got some spicy views on them.
Yeah, sure.
Let's start with AngloGold Ashanti. Making lots of news and talking big aspirations in relation to the Silicon Project area in Nevada. There, are you pretty buoyant about that growth opportunity? And also, how do you see their rethink of other assets as a result of that?
Look, I think that Anglo, they, what has what they've done is, redomiciled into the U.S. I think that was important. I think the fact that they basically are no longer a South African company, though yet trade similar to Goldfields on a lot of days. I think that they're in a real good spot to finally grow this company. I mean, and there have been if you look at the assets, they have been shaving off some so they could be in a position to build the Silicon project, and and I think that's what they're really looking towards, is trying to close the gap with their North American peers. And we've had that stock for a long time, and there's been some pain involved, but I think that the new CEO, he's doing a good job, and getting the company on the right path. So I do like I like the trajectory that Anglo's on.
Yeah. Do you think they'll even their acquisition of Sentiment like a year ago? It seemed like that'll pay itself off pretty quickly at where gold prices are right now, you'd imagine. And they didn't. It was a pretty undemanding price that they paid there. So yeah, that'll I think that looks like a pretty great deal right now. And do you think that they'll rationalize like their Australian portfolio as they kind of refocus their capital towards silicon?
I think that they want to maintain presence in Australia. So I think that the assets in Australia will be there, and I don't think they're for sale at this time. I really don't. So I still think that they believe that there's margin there, some growth, and I don't know what the growth is outside of their asset base. I don't know that they're thinking that. And I think that's when you look at Australia, you're kind of looking at, okay, where are the growth opportunities? And there are, we have Ausgold and a few other, Saturn and a few of these development projects in the portfolio, and they're coming along, but those are not AngloGold type of assets. They're really not. So,
should we jump straight into those two you've just mentioned there? Ausgold had some good news recently on a sort of land front. How are you sort of taking in the change in events there, and how long have you kind of held the stock?
We've held it for over a year or so, since John got in there. And they did the raise, so that's been
Good timing.
That's been quite a while. I think it's over a year. I think he's been in there.
Yeah.
So, so we have it at much lower levels, and I think that it is a good project. It just needs it has needed time. It's needed John and the team to jump through the hoops. They clearly, with doing the land deal, got one of those hoops crossed off, last week, and the stock has reacted nicely, and probably has more to go now. I don't believe that John is in there to build it. I really don't. So we'll see.
That's an interesting perspective. We'll have to keep our eyes on who potential acquirers could be of that one. And then like Saturn, we've got big scale, big tons. I mean scale in terms of amount of dirt to move, but production profile, around the bit north of 100,000 ounces per annum. But it's still got a bit of time before ahead of it, like FY27 or 28 at the earliest.
Yeah.
So this thing could be in production.
Yeah, and so there haven't been a whole lot of heap leach projects down in Australia, and so I think there's probably is a bit of lack of understanding of what they're doing. But I think I do think that Ian's doing a good job of systematically approaching that. I mean, he really is he likes to do exploration, and so he's going at it. But it's probably it's a couple of years away. But and it's not at this point. I mean, he's finding more ounces, but I don't see it as it's not a 200,000 ounce a year mine. It's a 100,000 ounce a year operation. It looks like, and so who are the buyers for that? That'd be in Australia. If he doesn't build it, one of the things that's happening is that these mining companies that are finding juniors that are finding ounces, they are kind of growing to the point where it doesn't make sense for a company to buy them if the market caps go up too much. So so then they get forced to build them, which that's not the worst thing in the world either.
Do you think the heap leach risk is overblown?
Pardon me?
The heap leach nature of the project. Do you think that risk here in Australia is overblown?
I do. Yeah, I do. I think Ian certainly is with his experience at Newmont, he's not afraid of it, and I don't think that from a capital standpoint, I think it's a good way to go. I mean, we'll see. I mean, they're starting to find some higher grades, which they would need if they went to the mill route with a CIL. But I don't think that. I think they're still looking at starting it off with a heap leach. So, and that's in Australia, like I said, there really isn't a lot of experience with heap leach. So I think that lack of understanding, has created a bit of a void, for investors to, embrace the story more.
If I'm not mistaken, Greg, you've got an allocation to Orezone, and they're currently in a trading halt right now on the back of news that that WAF has received a bit of a shakedown from the Burkina government. Orezone, also a Burkina gold producer. How are you feeling about about this?
I'm thankful that actually Orezone did trade. It opened up late today and went down about I think about 15%. And WAF is gonna trade on Monday, and they're gonna be down 25% probably at this point. I'm gonna guess, because you were down about see, with Orezone, they have a little different mining code that they were into the 2025, I guess, and so the government can't come back on them in Burkina. I was thinking that and I hadn't been in WAF for quite some time, and I went back in about a month ago, and it's thinking, okay, I think that the government's going to be happy with their 15%. They had just gone from 10 to 15, and so the fact that now they want to go to 50 is a little disconcerting. But I think that WAF is probably going to try to negotiate pretty hard if they can. I don't know what what they have to negotiate with. But the one of the things that is really disconcerting for investors is when you have these mines in some of these armpit countries, is that they want to go in and take them, and that resource nationalism is one of the big risks that is out there, whether it's South America through, and you do it, you don't take over the mine entirely. You do it through taxation and increase royalties. And, that's why you get, a lot of folks that are, okay, I can be in Australia, I can be in North America, but, you start going into these, other countries and it gets a bit dicey. So, I think, when I look at WAF right now, I'm not going to say what I'm going to do, but it's not a pleasant scenario.
If we just fly over quickly on the jurisdictional aspect, a couple of the other countries in the area that have significant miners, how are you thinking about the likes of Guinea and Ivory Coast and perhaps Senegal or other ones that you may have played in there previously?
Yeah, Guinea has been a good country. Cote d'Ivoire, these Senegal, they have been good countries so far. So, I think, when you're sitting in my seat, you're going, okay, well, we can have a certain percentage in, each one of these countries that, as long as it doesn't blow up your portfolio. And so, so I have no problems, taking being in, Cote d'Ivoire and Senegal and Guinea, as long as it's, doesn't make up, 25% of the portfolio type of thing. But, a couple percent here and there, it's okay.
There's a couple interesting projects in Mali as well. Are you courageous enough to go there these days?
The only real asset that we have there is with Barrick, and and Bristow is being pretty tough with those guys, believing that they can't operate the mine, which I don't think that they can. But that there, I think what the Mali government wants to do is they want to try to bring in one of the other miners to mine it. But we'll see if Allied.
Well, they can't ask Resolute.
Yeah, Resolute. I think it's if it's anybody, I would imagine it would be Allied,
Right.
Peter Marone. But that's a possibility. I think that if you really were to take that away from them, they would lose that in arbitration. But we'll see. I think of the three assets that we have there are Barrick, Robex, has a small, and Allied Nevada. Not Allied Nevada, but Allied Gold.
Yeah.
So
I'm curious what you've made of the run of Lundin Gold. It's truly phenomenal. Fruta del Norte has had tremendous exploration success, and just the ability to deliver that project in that part of the world. It's a $20 billion company, like in Canadian dollars now, $20 billion for a single asset in Ecuador. Surely they're going to buy something soon.
The thought process had been that the Lundins want to sell that to Newmont.
Yeah.
Newmont's in there with a big piece that they got when the Newcrest deal happened. Obviously, that's a big chunk of capital that's sitting there. What does Newmont do? There has been speculation that Newmont, would make a bid, but at these prices, that's become less likely. This is what the market's doing. It's running in front of what would be acquirers, and so I don't see that Newmont makes a bid for. At least I'd be surprised if Newmont made a bid for Lundin. So where does that leave Lundin? So Lundin had made an offer to buy Reunion Gold, and so and I think that. I wouldn't be surprised if they step up and make an offer again. But they're going to have to get Newmont to sign off on that. I mean, that's one of the things that Newmont, our Newcrest, wouldn't allow the Lundin guys to do is to buy anything. And so they put a kibosh on them because originally they were thinking Newcrest, they were going to before they bought the asset up in Canada, Pretium, they were going to they were talking about making a bid for Lundin. And so the Pretium deal came up, so that put Lundin on the back burner, but they still had ideas that they were going to do the Lundin deal. And so, what ended up happening was, Newmont stepped up and took out Newcrest, and now Newmont's in that same seat of having 35% and saying, okay, well, we're just going to let this play out a little while longer, but don't buy anything. So these guys have blocks on the, blocking votes on the board, I guess. So,
and speaking of takeover dynamics, IAMGOLD is another one where you thought it was like pretty undervalued for a while, especially given what the value of Côté should be, and in the last couple of months it's really had a run. Do you think that's on the back of speculative corporate action as well?
I think so far Côté is still in the build-up phase. So there's no doubt in my mind that IAMGOLD wants to be sold. So how that gets worked out is whether you hive off what they have in Burkina and other assets and create separate entities. But I think there'll be some type of transaction that takes place there. That would not surprise me. But it's coming. As soon as Côté just has to show itself a little bit more, because these guys are nervous about CEOs. The last cycle especially. Every time that they did a takeover, it didn't work out, then they get hived off quite quickly.
There's a few of those pretty substantial assets that are still proving their straps from a ramp up perspective. Like in addition to Côté, you've got the likes of Artemis's Blackwater, and you've got Equinox's Greenstone. Do you think that once if as they do, or if they do kind of prove themselves, that they become kind of like logical acquisitions at the right price for the majors?
I think there's no doubt in my mind that Artemis is for sale at some point. I think it probably needs to work on getting its debt level down, so it just needs to produce for a while to do that. And I think the big guys they look at mines that can do 500,000 ounces, and there aren't that many of them. So it's an attractive asset. It's not necessarily that cheap when you take the debt into consideration, but I do believe that one of the big guys will make an effort there at some point.
Just to reflect back on the share price movements of some of these bigger companies, like to talk about Lundin once more, they've more than 10x'd in the last few years. It's just incredible. And I can't help but notice that their market cap is almost double that of some of the companies that have been sort of grouped as major miners. Like, how do you think about the rationale for continuing to hold a company like that with the single asset risk in Ecuador?
That's a good question. Now, I've always been of the belief that you run with your winners, and that the companies will continue to create value over time. And right now I'm still betting on the Lundins. And fortunately, what they're doing is they're being very aggressive in terms of, okay, well, we're going to pay back cash to the shareholders. And obviously Newmont's a big shareholder, but so are the Lundins. that's one of the reasons why I thought that the Lundins wanted to cash out and put the that cash down into the copper assets that they have. But I still I'm still thinking that. But at this point, they're willing to let the free cash flow come back to shareholders, which I'm a strong believer in investors participating in cash flow. And this is one of the problems that we've seen with the gold mining industry, is that investors haven't participated in the cash flows the way they should. And I have a very simple formula in that that this business needs to be basically a third, a third, a third. And a third goes back into paying off the mine, a third goes to the shareholders, and a third goes to the next mine. And if you do that, everybody participates. So so that's the fact that the Lundins are paying us back. I'm certainly in favor of that.
So Barrick sell their 50% stake to their JV partner, NovaGold, who've been in that asset for quite some time. And NovaGold have a run-up that they haven't quite had in a number of years, but there's still an enormous CapEx bill there. How do you think about the Donlin project?
Yeah, I mean, there's a lot of gold there. And certainly Tom Kaplan and that group has been playing up the okay, well, the gold in the ground is fine, it's a asset, and we don't have to mine it. I think now they're at the point where they've tired all those folks out and said, okay, well, we're going to have to build this eventually. And Barrick looked at it and said, okay, well, we're not going to get the return. We'll sell it to these guys, let them run with it. We don't want to spend the management time to do that. So it's I think it's going to take a lot of capital, clearly. And I'm not willing to go there at this point. So hats off to them, really. So but yeah, it's not an easy project. You got to get the power up there. You're going to do it with natural gas or however you're going to do it. I don't know, but yeah, we'll see. But there's a lot of gold up there. There's certainly a lot of gold there.
One of the larger positions in the portfolio, Greg, is Catalyst Metals, who had a tremendous run last year. Retreated a bit, but but proved their straps when they got their hands on Plutonic. I think they've got a bit more capex ahead of them now, and the easy runs might be over. But do you still have a pretty strong outlook for their ability to generate cash?
So James has got some work to do there. He's basically at this point now, he's got to prove up the market cap that the market's given him. And so, he's talked about getting to 200,000 ounces. He's got the Trident project. He's got Plutonic East. They're getting some good results on the Plutonic. I mean, on that Plutonic belt, and through Trident. But the question is he going to be like his father and go out and buy things? My guess is that yes, he will at some point. Go Hirsch. Dad, I saw what you did, but I'm going to do it better. And so far, I actually think that he might be a bit more disciplined than his father was. So maybe he learned a bit at the breakfast or the dinner table. But one of the things that's interesting about Catalyst, I mean, they waited a long time. He could have done that raise, I think brokers were beating on him for a long time, and he didn't do it, and he finally did it. So the question is okay, what is he doing with that money? And is he buying something, or is it just there to keep a larger buffer? So I don't know what the answer to that is yet, but I do have confidence in his ability. And a lot of times, you can sit there and you can sell assets, when they've run, and then look to buy it back some other time. My I have historically been a pretty low turnover fund, and have been, if guys have been performing, I let them perform and continue to perform, and I'll ride out the ups and downs. That's the way we've operated, and so I think that we'll at this point I'm willing to let James run with it until he shows otherwise. And once management starts doing things other than what they say, then it's time to leave.
I'm really curious just to hear how you think about hedging in this environment.
That's a good question. So hedging is basically been a hedge for to not make money. For a lot of companies, they think they're hedging the top line. They can't hedge any costs really. They try to, you can look at energy, maybe they can hedge a little bit of that, but for the most part you can't hedge your costs, and then the costs keep going up, and then you're stuck in a situation where you've sold forward, and then your cost profile goes up, and nobody wants to be in a company where the gold price is going up, and they're locked in at $2,000 gold. I mean, if you look at how many companies have really, and mostly the Australians have been the worst, have really died because their hedge book portfolio has gone against them. I mean, clearly, obviously, Bellevue, Regis, they had a tough book. I mean, a lot of these companies that have had big books, go against them, they've, it's been very detrimental. So I'm not big on hedging. And one of the things that you look at now and say, okay, $5,000 plus gold, if that's not a bad gold price in Aussie terms at all. And so you have to have a view on what the Aussie currency is going to do. And so if you think that the Aussie currency is going to get much stronger, the gold price isn't going to do anything. And so that's one view that you're going to have to take as management. I think that companies have gotten better at looking at hedging more from, okay, well, we're going to do options, and we will take the take a little bit of money here and hedge ourselves on the downside, or they'll do some zero collars. But for the most part, if you look at the successful guys that have been in the hedging game, they've basically bought puts and just written them off. So
I could have guessed your views there. You want the miners to hold gold on their balance sheet, not deliver it to to a counterparty.
Yeah, right. I mean, one of the things that is, when you look at the gold price, it's that volatility that is in the share price. So moving with the gold price.
Yeah. Yeah. What's the most undervalued gold company, gold producer right now, and then gold developer right now?
Yeah, I look at a lot of these companies and say, okay, well, where are we going? And I'd like to think that I have got this small one that I've had for a while, Jaguar Mining, in the portfolio that had a tailings issue, and so once they get that squared away, and then are able to expand their operation, that looks cheap to me. That the market's going to like it. The developers really in a position to where they can really make hay in this environment. if they do it correctly, but that's not blowing up their shareholders along the way. Entirely just saying, okay, well, we need cash, so we're going to take cash every time we're offered, because in a bull market they'll be offered cash every other day. So you have to make sure that you have managements that are not going to dilute you out. So that's one of the problems that you have with developers, is that they will blow you out of the water. So you have to know that the management teams are there, understanding the fact that they've got to keep a close eye on ounces per share.
On that sort of theme, Greg, I've got a bunch of rapid fire questions that I want to fire towards you. With the first one being, who do you think is the best management team in the industry right now?
Best management team has been Agnico. They've been the best.
I thought that might be the answer. Do you have a favorite gold mine that you've come across in your career?
Favorite gold mine? Oh yeah, I mean, my favorite gold mines through the years have been the Nevada gold mines that Barrick and Newmont had. Those have been the the best. From I go back to early 1980s, so those have been some pretty spectacular mines.
Yeah, long history there. How about the best jurisdiction to operate in the world right now?
Yeah, I'm gonna still say that you've got to be in North America, and Canada, and Australia. Probably Australia is getting more, unfortunately, more and more like Canada and the U.S. that is taking longer to permit. But from a sanctity of the tenements, that's those are the countries that you want to be in.
And most likely deal in the next 12 months.
Yeah, I still think Lundin disappears somehow. But I think they buy an asset. This is probably my guess. That Lundin buys an asset first.
Would you say in the Americas?
Yes.
Yeah.
In the Americas.
Yeah. Interesting one. How about the best site visit you've been on?
Yeah, I'd say Barrick's Nevada gold mines have probably been the best site visits I've been on. From a large cap mining company. I mean, I've been on plenty of go out and kick the dirt on but in terms of seeing an operation, that's probably you can see the most there.
Last one from me. Is Agnico more likely to buy Oregon royalties or IAMGOLD to get their hands on Côté in some way, shape, or form?
I think that they would be more apt to buy Côté. Is probably my guess. One of the things that they're certainly looking at is maintaining their jurisdiction profile, and I think that's one of the things that Côté offers them. And so you're gonna have to split up split off the Burkina assets. So I mean, they have no problem. They have a history of doing that. So I would be surprised if they make a joint bid with somebody, or somehow they figure it out, or just create a separate company.
Fantastic, Greg. It's been an absolute pleasure to speak and get your insights on the the gold equities and the gold market. And it was also enjoyable for us to talk about some of these North American gold miners that we don't spend heaps of time talking about.
No, you spend all the time talking about the Aussies all the time, but I understand that you most of the time, you guys mostly Aussies down there listening. So
yeah, it's just local market bias, I think. Time zones do matter, obviously, and it's it's kind of hard to force yourself to pay attention to the other time zone. But we speaking to people like you, we're getting there.
One step more educated now.
Yeah, I know. Well, I think and I do think that you do see the Aussies are they don't do a very good job when they come to North America. they probably should stay away. But clearly down in Australia, and there's a couple guys playing around down in South America. That certainly could get a bid. And I think that there is a market in Canada. There's a market in Australia for resource companies that's not there in the U.S. And so that's a real positive for the industry overall. So
yeah, totally. There's still that appetite here.
Yeah, no, there is. So I mean, Canaccord is running the stuff up.
It's very true. Thanks a bunch for joining us, Greg. Appreciate it.
Yeah, my pleasure. Thanks, guys.
And there we go, mate. A massive thank you to our fantastic partners for making it all happen. Sandvik Round Support, Focus, the platform by Market Tech, Axis Mineral Services, and last but not least, get your tickets to Africa Down Under next week.
Hooroo.
Now remember, I'm an idiot, JD's an idiot. If you thought any of this was anything other than entertainment, you're an idiot and you need to read out a disclaimer.